Ladies and gentlemen, welcome back to the channel. We have some big news to cover today for Tesla stock. Now, we're going to get into your news, but we're also going to talk about what's coming next for Tesla. Into the end of this year, we'll talk about next year as well, in case you're unfamiliar. It looks pretty certain that we're going to have a Santa Claus rally. And beyond that, I think next year looks incredible for Tesla. And, you know, I think Tesla's going to shock a lot of people in the next 12 months. Before we get into all of that, hit the like button as well as subscribe to the channel. Let me know your thoughts on this down below in the comment section. Are you bullish? Are you bearish? Are you kind of holding tight here? Are you just waiting to see what happens next? Let me know what you guys are doing down below in the comment section. If you guys want to come join the trading community, check that link out down below in the description of today's episode. But with that said, let's begin. So first and foremost, let's talk about Friday. Now, Friday markets did well. There was a bid in the risk areas of this market, like small caps and technology and semiconductors. They did better after what was the last really couple of weeks of a rotation out of those areas into healthcare, industrials, consumer staples, right? There was a risk-off trade in the last couple of months, generally speaking. Well, the risk-on trade started coming back quite a bit on Friday. S&P was up almost 1%. If you include the after-hours move, you were up over 1% total. Part of that has to do with Oracle. Oracle is getting the green light to buy a portion or partner with other companies to buy a portion of TikTok, and Oracle has been plagued with quote-unquote bad news recently, and well, that bad news streak seems to be coming to an end. Oracle has been the stock that has caused a lot of the pressure in AI stocks, in small caps, in semiconductors, okay? Oracle's issues have bled over into everything else. Now, Tesla on Friday was actually in the red about 0.45%, roughly a half of 1%. There was no clear rhyme or reason for this. There's no one catalyst you could point to that explains why Tesla was lower on Friday. And I really think the only explanation for Tesla's underperformance on Friday was the stock has done so well recently. Tesla can't just be an outperformer all of the time, right? You've seen the areas that have not been doing well that took leadership. Did Tesla do terrible on Friday? No, but it wasn't a leader on Friday. That doesn't, take away from the rally that is coming for Tesla. It just means, hey, look, people were interested in other areas on Friday, and that's actually a good thing, right? That shows that Tesla's not getting so bullish at this point that, you're going to be due for some kind of massive correction because the stock got too overheated, right? This is a very healthy rally that Tesla has been going through, and I think that is going to get a lot more dramatic into the end of this year and 2026, but we'll speak on that in just a moment. First things first, I do want to cover your big news today for Tesla. Elon Musk's 2018 CEO pay package from Tesla, worth some $56 billion when vested, must be restored. The Delaware Supreme Court has just ruled. So Tesla and Elon have won. I mean, this would have saved investors so much trouble if this was the outcome from the beginning. Like, come on. Now, this did go all the way up to like the Delaware Supreme Court and all of that. They're the ones that made the ruling. And it's good. It's good to see. Maybe that is partly why Tesla's stock did basically recover any of the loss you had Friday in regular trading in after hours. And I do think this is important news. The Delaware Supreme Court's ruling on Elon Musk's 2018 compensation package, they said, quote, "We reverse the Court of Chancery's rescission remedy and award $1 in nominal damages. The plaintiff's attorneys are awarded fees and expenses based on quantum merit and 4 times multiplier and post-judgment interest on the revised fee award from December 2nd, 2024. Any disputes regarding fees and expenses should be brought to the Court of Chancery for resolution. Jurisdiction is not retained. This is amazing news for Tesla stock and for Elon Musk, and really for capitalism, right? To be able to set lofty targets and achieve them and be awarded for them and to be aligned with shareholder interest is incredible for the economy, for the way the system works in America. Like, I would much prefer for CEOs to be compensated based on their performance, and if they do really well, make a lot of money, versus some CEOs just make a lot of money and shareholders lose all of their money. You know, Lucid, for an example, a great example. Lucid CEO was the highest paid CEO, I think, back in 2022. Made like $350 million, and the stock went down like 80%. Should he have made $300 million? Probably not. Tesla has also released a new safety page today. They say, quote, our global fleet of 8.6 million vehicles is actively generating anonymous data from real-world driving scenarios, experiencing more in 1 minute than a person can experience in one lifetime. We turn these learnings into safety improvements and share them with all Tesla vehicles through free over-the-air software updates. That is crazy. In just 1 minute, Tesla is gathering more data, more footage, more miles driven than you could ever experience in your life. Just the scope of that kind of data is crazy to even fathom. Volkswagen today has announced that they are canceling the all-electric ID.Buzz in the US after just a year on the market. Following a careful assessment of current EV market conditions, we have made the strategic decision not to move forward with model year 2026 ID.Buzz production for the US market. The ID.Buzz started at $60,000 with 234 miles of range and a 91 kilowatt hour battery. Now, I've actually seen a couple of these out on the road. These remind me of like the vans. I have no idea what they're called. Like when I was a kid, you'd see them quite often. They have like the curtains in the windows, and some people put like beds in there and like full on, live out of these vans. They got like the curtains in the windows, right? Somebody knows what I'm talking about. I have no idea what those vans are called, but every time I see them or see an ID.Buzz on the road, that's what it reminds me of. The Tesla Europe and Middle East X account shared this. They say, quote, more Tesla Model Ys have been registered in Norway in 2025 than have ever been registered by one brand with all models combined. And Tesla looks like they are still breaking records. We have another review of FSD supervised from local media in Australia. They say, quote, driving in Australia will never be the same. Once you've driven with FSD for any length of time, it's hard to imagine life without it. There's no looking back. Tesla don't want us to say this, but it's close to a robot car as you can get. A Tesla patent from October reveals Tesla is developing a high-tech camera shield featuring light swallowing microcones, a motorized mechanism to actively tilt a glare shield depending on the sun's position. The patent abstract says, quote, the glare shield features a textured surface composed of an array of microcones or cone-shaped formations which serve to scatter incident light in various directions, thereby reducing glare and improving camera vision. The microcones are optimized in size, angle, and orientation to minimize total hemispherical reflectance, THR, and reflection penalty, enhancing the camera's ability to accurately interpret visual data. Additionally, the glare shield may include an electromechanical system for dynamic orientation adjustment in response to the position of external light sources, such as the sun. The manufacturing process of the glare shield utilizes a sintered tool steel insert, facilitating venting during molding and ensuring the precision of the cone-shaped texture. Now, Sawyer Merritt is providing a little bit of context on Elon's prior compensation package and why this approval from the Supreme Court in Delaware is good for Tesla. He says here, Elon currently holds about 304 million exercisable stock options from his 2018 compensation package at a $23.34 strike price. These options are currently worth about $139.2 billion before taxes based on the closing trade price of Tesla today. Elon has until January 2028 to exercise these options. When he does exercise, it will create a taxable event. The options will be taxed at top ordinary income levels, or 37%, plus a 3.8% net investment tax. He will also have to pay 13.3% top tax rate in California, since at least some portion of the exercise options were granted and earned while he was a California tax resident. Once exercised, Elon is required to hold those shares for 5 years per his Tesla 2018 compensation package rules. After accounting for taxes, I estimate that exercising all of these options would leave Elon owning roughly 18% of Tesla. Based on the company's current share count of about 3.33 billion shares outstanding, his ownership could be a few percent higher if he doesn't pay the taxes by selling Tesla stock. This estimate obviously excludes any potential additional ownership down the line from his recently approved 2025 CEO Performance Award, which consists of 12 tranches worth 1% of the company each that requires him to achieve certain operational and market cap milestones. While the taxes will be substantial, it doesn't necessarily mean he will sell Tesla stock to pay them. SpaceX could go public in the near future. Elon reportedly owns 42% of the company, and XAI, currently valued at around $230 billion per media reports, will likely be worth much more over time, plus his other companies, giving him multiple options for how to fund the tax bill. Lastly, Elon does not need to exercise all of these options at once. He can spread it out over time if he so chooses, but the hard deadline is January 2028. Overall, the Delaware Supreme Court's ruling is great news for Tesla, Elon, and shareholders, not only because it was the right decision, but because it avoids more than $100 billion in potential accounting charges for Tesla and its shareholders. Also in the news today, Tesla has opened a new 60-stall supercharger with solar canopies in Manning, South Carolina, one of the largest superchargers on the east coast of the US. Sending this email to people in Denmark, teasing that FSD Supervise could officially launch in the country in early 2026. They say for now, they are encouraging people to take FSD Supervise ride-alongs with Tesla employees. Quote, a Tesla advisor will guide you through the ride and give you an exclusive look at what to expect when it rolls out in early 2026. Now, in option activity on Friday in Tesla stock, you had 228 different trades totaling $206.32 million with a positive order value of 68%. So a little bit lower than what we're used to, at least in the past week. The positive order value was on average 71%. So a little bit on the weaker side, but pretty normal overall, and more positive than negative, so that looks good. Now, over the past week, you had 2,061 different trades totaling $3.17 billion with, again, a positive order value of 71%. So a little bit weaker on Friday, but pretty well in line with normal levels for Tesla. Now, short sellers, they have a short position of 78.3 million shares. The float is 3.3% sold short. That doesn't sound like a lot, but for a company the size of Tesla, that's actually a lot. 78 million shares. As I've talked about before, once you start to break, higher from here and break new highs, you're going to start putting a lot of pressure on short sellers, specifically once you break above $500 per share. There's going to be a lot of pressure on shorts, okay? Why? Because there's going to be a lot of momentum in Tesla, right? Tesla seldomly breaks a major level and doesn't break big time, right? Like if Tesla's going to break 400, typically Tesla's going to really break 400. It's not just going to break 400 and then sit around 400. Like it's going to break 400 and run from there. Okay? At least that's what we've seen at any other time Tesla broke 400. I'm just pointing out 400 for an example. You tend to, run from there once you break out of major levels. What do you think's going to happen when we break 500? Tesla stock's going to take another leg higher above 500. It's going to put a lot of pressure on the shorts. You're going to see a lot of traders coming into Tesla to trade the new all-time highs. That could lead to a bit of a gamma squeeze. And again, short sellers, some of them covering on short positions, could be big for the stock as well. Now, as we've talked about before, Tesla's volume is anywhere from 36 million on a really low day to 120 million on a higher day. If you get 3, 5, 10 million shares that abruptly want to cover in a day or two, that's going to add a lot more buying pressure and really help send Tesla stock much higher, right? 3 million shares, 10 million shares, a relatively low amount can do a lot in terms of, sending a stock higher when short sellers are trying to cover. And that would be the thing that I'm looking out for into the end of this year, into 2026, because it's one thing, for a Santa Claus rally and kind of a tactical year-end rally, but 2026 looks like it's going to be a great year between inflation coming down, the Fed cutting rates, a new Fed chair. AI is alive and well, and I used to talk about this more. We should probably start because I think we're getting pretty close to this. But I believe the second wave of AI is not going to be infrastructure. It's not going to be data centers. It's not going to be which companies can buy the most GPUs, right? It's going to be which companies are actually creating products and services with AI and doing so, right? And hopefully growing profitably or already are profitable. Tesla is a standout. Nobody else is doing what Tesla is doing with AI. That's the fact of the matter, right? Tesla is the world's largest AI applier at this stage. There is no other company that is doing what Tesla is doing to change the world the way that Tesla is changing the world. Now, next year, there's going to be a lot of advancements in Tesla's AI. FSD is effectively solved. It's effectively unsupervised FSD. While Tesla is not likely going to call it unsupervised FSD until the second half of 2026, it puts a lot of pressure on legacy autos. It really highlights Tesla's lead in AI, and again highlights just how advanced Tesla is. Wall Street has thought of Tesla as a car company for a long time, and that is going to flip if it has not already. I think most people don't really look at Tesla as just an auto company these days, but 2026 is going to be Tesla's year. Between robotaxis expanding to a dozen or 24 cities next year, the robotaxi vehicle count out on the roads increasing to the thousands. Robotaxi is going to be actually, I hope Tesla breaks it down in a separate category on earnings, but robotaxi is going to grow into a massive business, and more importantly, a massive profit generator for Tesla, right? Tesla and robotaxi, that revenue is going to be a lot more profitable than the auto business, right? If Tesla can bring in $5 billion worth of robotaxi revenue, that could add $1 to EPS or more. Like dollar for dollar, robotaxi revenue is a lot more valuable than Tesla's revenue they're generating today, right? So the Tesla story in and of itself, very strong for next year. The broader market story for next year, very strong for next year. Again, big, beautiful bill, consumer getting stronger, real estate. I could only imagine it gets better next year versus worse. Now, could it get worse? Of course, but I could only imagine it would get better. Consumer is going to get better. Big, beautiful bill about midpoint next year. Tax refunds start to kick in, and people are all of a sudden going to have a lot more money to spend out there. As long as inflation continues to come down, Fed's going to be cutting rates. The markets are projecting 3 times next year. AI is alive and well. Trade certainty. I mean, 2025 was a year of turbulent trade policies. That should be largely over with, right? And even then, the government's like cutting red tape and, trying to do what they can to make investment easier in this country. So without any like black swan or gray swan events for next year, you have a very strong setup for markets. Now, I'm pointing this out right now because there's something called a January effect, where sometimes you have a really strong January, and that's mainly if Wall Street is expecting a strong year that year, right? Wall Street prices things in ahead of time. So if you're expecting a strong 2026, Wall Street might price in a lot of that in January and get ahead of itself. If it gets ahead of itself, you tend to see these large rallies, and then kind of nothing happens in markets for a while, right? You could have a 7% rally in January, and then the markets are sideways for 3 months, right? Wouldn't be shocked if that happens, but either way, I am expecting a tactical year-end rally, and likely a rally that extends into the beginning of 2026 because, again, more tactical reasons, right? Mix in here. We have a strong setup for next year, but CPI came in way lower than expected. The jobs report was almost perfect. We're expecting a rate cut in Q1 of 2026. We don't really have any other catalysts from here. It looks like the consumer and economy is doing fine. Holiday shopping is shopping. It's doing well. Wall Street is really underweight this market. They have been net sellers of stocks in 2025. The tax loss harvesting is long over with. So, minus any crazy news coming out, it looks pretty obvious that we should have a year-end Santa Claus rally on our hands that begins, that I think has already begun, but really kicks into high gear in this upcoming week, and then the week after that. So this week, the 26th is Friday, and then the following week, Monday is the 29th, Tuesday is the 30th, Wednesday is the 31st, and then Thursday and Friday are the first two days of January. Technically speaking, the Santa Claus rally, technically speaking, okay, is the last 5 trading days of December and the first 2 trading days of January. So technically speaking, the Santa Claus rally would actually be Wednesday, okay, Christmas Eve. I believe markets are closed on Christmas Eve, so it might be Tuesday, and then Friday, and then Monday, December 29th, Tuesday, Wednesday, Thursday, and Friday of the following week. So technically part of the Santa Claus rally begins next week, but the larger chunk of it happens the following week. And as I've said before, I think Tesla ends this year well into the 500s. I mean, Tesla stock's at $482 per share, so that's not crazy, but I think Tesla could be a 550-ish dollar stock by the end of this year, which has been my call for months now. So let me know your thoughts on this down below in the comment section. Hit the like button as well as subscribe to the channel if you guys have not done so already. Have a great rest of your day, and I will see you in the next one.